BP is working to deliver the energy America needs today while developing lower carbon.
All right, what's going on, Sci Nation? Happy Saturday or Sunday to you all, wherever you're at in this world. First and foremost, congratulations to those that have made it. I know that a lot of you have many other things you'd rather be doing on a Saturday or a weekend than sit here on your computer and watch me go over the market and education, right? So give yourself a big pat on the back. But keep in mind, those of you that are here are going to be the ones that are going to continue to progress and evolve because sometimes you got to do things like this in order to level up in this game. Um, all right, let's get this started. So let me just clear all this fun stuff. Um, while I'm clearing this, if you guys all, I just see this says, just hit the subscribe button so that you get the notifications about me putting on Twitter. And also, when I upload videos, you get a notification first as opposed to it coming out later. Because sometimes I'll put a video out and it won't get done editing until an hour or two later, and I might be in bed and you'll get the notification before anybody else does because I might not do it until the next morning and whatnot. Um, okay, let me see. Hey, well, just want to say, hey, what's up, Jay Cortana, Michael, Laneck, um, Anitich, Ken, the Bull, L, Goodies, Lawrence. I mean, I don't. If you're on here, you don't type anything. I can't see your name, so I'm only can only call out people who I see typing and whatnot. All right, so this is gonna be a introduction level to the strat, right? We're not gonna get in crazy detail about it, right? Just because it's gonna take something that would take days, if not weeks, to really answer it, right? I mean, we can dissect literally what bullish or bearish harami is and how it opens, how it closes, the type of that candle, etc. Right? This is really just to give you all a introduction to what the strat is, especially the numbering system, how it looks visually. That way, when you all see me type some kind of crap, like like if I type out hey, tomorrow we got a 122 or 312 or 222 or 212, 321, a 22 whatever. You see me type all this crap out before, right? This will just give you an understanding on what the heck is he talking about? What is Sad mentioning what are these numbers? Is this some kind of Da Vinci code going on? It is not. It's just another way to look at the candles, right? What you all are used to seeing is something like this, right? You're just used to seeing candles, right? You're like, oh, here's a candle. Like, we have a inverted hammer here. We have bears engulfing here. This is a bullish harami. That's what you guys are used to, and that's nothing wrong with that. It is the traditional way of looking at candlesticks. It just makes it a little bit more harder to and difficult to look at, especially for new traders and whatnot. So this numbering system was created by a gentleman named Robin Black, and rest in peace. He unfortunately just passed away about 2 weeks ago. A little bit early, passed away too early. He was still young, meaning that he was like probably in his mid 50s or something like that. I don't have all the details. You can search FinTwit and you'll see it. But he was the person that created this numbering system, right? Because he said price can only do, one or three things, right? It's either it can consolidate, it's gonna make a directional move up or down, or it's gonna do both, meaning that it goes up and then reverts down and goes the opposite direction. And by doing that, it made it easier for traders to understand what was going on with price action, right? So with that, I'm just gonna give you a high level definition of it, and then we're just gonna kind of talk about it and run through some examples of it, and give you a better understanding on what this numbering system is. I will leave this live stream up for a little bit. I may take it down just in later on, just because this is very nothing's planned, meaning I didn't write any material down. I rather it be a proper class for people who want to come on later and actually look at it. And I will put this out there: I am by no means an expert on this. There's people that know this strategy a heck of a lot better than me. I do use it a lot. I would say that I am very comfortable with it for myself and how I utilize it and how I see it and how I, share it with you all. But I'm not going to sit here and say that I am the best stratter, and whatnot. There's a lot of people out there you can find, YouTube, Google, whatever, and they will that. Again, this is all for educational purposes, not financial advice to any of you. You do what you want with this information. Again, I don't solely use the strat. I think you all know that by now. This is part of my strategy. That's why I say I am a hybrid trader. I incorporate it into it because it makes it very useful for me. And I would say that a lot of people that have started adopting it or incorporating aspects of it have found it useful as well. So let's just I'm just gonna draw a candle out. So let's just say this is a candle, right? This candle is not gonna have a number to it because this is gonna be our basis to determine what the next candle is gonna be. Actually, let me just do this real quick. Like I said, nothing is scripted or planned. It's just get run with it. Okay, so each candle that you see here can be either a 2, a 1, or a 3. And like I was trying to explain a couple times in live space, let's just say we have a candlestick here, right? This candle here. Let's just say this is the start of our price action, right? If we think that, if we make a candle that goes up and takes out the high, it only takes out the high, right? Only takes out this high. This is considered a 2 candle. And it closes like this. It's a 2 candle. Why? Because it's directional movement. It took out the high of the previous candle. Now, if it did this and came down, well, that is still a 2 candle, right? But now it's a 2 down. So whenever you see me say 2 down, 2 up, or fail 2 up, or fail 2 down, this is kind of visual graphic representation of what that means. So 2 could be either way, right? It can either be down or it could be up, depending on what it did and how. It doesn't matter. It can go up and then close below it, and then we can have a wick. Where's my drawing tool? We have a wick like this, and it closes below it. That's considered a failed 2 up. But like I said, we're not going to talk all about that right now. I just want to let you know that's what a 2 is, right? Either it takes out the high or the low, not both, one side of a previous candle. So in the comment section, type a 1 out if you understand and you're tracking what I'm saying so far, because this is important. If you don't understand this at all, then everything I go on forward is not going to make any sense. It's not going to be relevant for you or beneficial. So please hit me up with a 1 so I know you're following. A lot of those that have familiar names in here, I know you understand this, but for the new names, just type a 1 so we can we're just going to dilute this and break it down, make it very easy to understand. So just hit a 1. I want to make sure we're tracking. All right, cool. All right, most of you getting it. And if you don't understand it, look, if you're not following me on Twitter and you just found this stream randomly, follow me on Twitter, Stocks After Dark, and DM me, and I will answer you. I'm probably one of the few people on FinTwit, whatever we want to call it, or FinX, Elon's X, whatever you want to call it, that will actually respond to you. Okay, great. Everybody is tracking, right? So that's what a 2 is now. Okay, we can move, our Mr. 2 out of the way and bring Mrs. 1 in, right? Now 1 is in. The reason why this is a 1 is because it did not take out the high or the low. It is in the inside. It is contained within this previous candle. And we will talk about wicks and shadows or tails, whatever you want to call them later on, right? They in trading the strat, the whole entire price action range of price action matters. Traditionally, historically, if you were doing normal candlestick patterns, they would just really focus on the main body, especially in forex trading, right? And I don't want to get into long discussion on it because it's the premises of that is because there is slight discrepancies within the exchanges on the forex, meaning that from one exchange to another exchange, there's always a variance, maybe by anywhere from 100 to 1,000 pips, depending on exchanges. So that's why they don't use the shadows, because it's what you may see on yours may be a little bit different from mine, but because we're all trading CME on U.S. stock exchanges, that is not a relevant discussion. So, like I said, not here to talk about that. Really, just here to talk about these patterns in numbers and whatnot. Okay, so now you guys see the one, right? One is an inside bar, right? So let me just show you something that you guys, it's nothing new, nothing new. You've seen this before, you all, you just don't realize it. Here, I put something on the screen, now you'll see it, right? All right, cool. You guys see this? It's called bearish harami, right? Here's one, let me give you one more. The bullish harami. Right? So you guys all seen this before. Look at this. Like, so this red or green candle is really here, and the smaller, baby harami is Japanese, for baby, right? It's right here, right? This is it. The difference is that you all were used to seeing this. If you old school, if you're new, you probably have no clue what this is, just because most of you probably are not studying candlestick patterns. But that was what an inside bar is, right? You see, it's inside of it. It's inside this mother bar. So hit me with a 1 if you're tracking with what the 1 is now. Well, make sure everybody's on the same page, right? Because this is important, because we have 3 numbers, not a lot of numbers, and gotta make sure you all are following and understanding this. All right. Wonderful, 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 beautiful. Again, I'm gonna leave these up here just so that we have these, because like I said, it's the strat is not a new thing in terms of there's new candles. No, it's not. It's a new way to look at candles. At least that's my take on it, right? And there could be a more advanced stratter, professional stratter, whatever, an epic stratter in here that or that sees this later on and will correct it. And I have no problem, right? I'm just telling you this is how I interpret it. But I'm also keeping these old school patterns up here so you can see that, oh man, I never knew that. You were trading the strat all along. That you never knew about. You just didn't know that you're doing it, right? You're probably like, oh man, we're bullish and bearish harami, and this is what's going to do next and whatnot. But that is what a 1 is, right? It's just price consolidation. This means that there's indecision. And then later on, we can talk about, if it's a full body candle, Spain top, doji, whatever, that has significance. Well, right? An invert hammer, right? It doesn't matter. It's still 1. But within that 1, there's different types of candles that can give us a directional movement, projection ahead of time. So now that we are done with, okay, I'm sorry, I'm just reading. Hey, Ken, look, let me quickly re-explain this real quick. So I don't know when you join in, Ken. Ken, okay, I don't know what 2 is. Here's a 2, right, Ken? Ken, real quick for you, buddy. Look, 2 is this. This is a 2, right? 2 just means that it either took out the high of the previous candle or it took out the low. It's a directional movement, right? It took out high or low. It did not take out both. That's what a 2 is. Hit me with a 1, Ken, if you understand that now. You there, Ken? Does that make sense? All right, buddy. I'm just going to assume that you understood this concept just there. Okay, great. So look, we just went through the 1, we went through the 2. Now we're going to go through the 3. All right. The 3, what that means is that it took out the high here. Let me just, you know what? Let's get a little bit more fancy. And low. Well, you can see this previous candle, right? So now we're at the 3. It just all it did was take out the high and low. We're not worried right now about which one it did first, right? For the sake of keeping this very simple, very easy and intuitive for you all to learn, that is what a 3 is. It took out both ends, right? So now hit me with 1 if you understand what that means, right? Just want to make sure, okay? Because I don't want to assume. To me, this is now it's like it's just second nature. It's easy for me. I'm like, okay, this is, you guys should understand this, right? Great. Now let me show you something else, right? You all been trading this. You all been trading this this 3. You just didn't realize it. There's our 3. All right, hit me with another one if you saw these before, right? You seen this pattern before, this candle, right? Hit me with one. Let me know. So it's starting to click a little bit now. We're just gonna take this. I'm literally just gonna walk this step by step by step for you all. You know. All right, there you go. So you've seen it, right? Look, I just showed you 4 candlestick patterns: the bullish, bearish harami, the bullish and bearish engulfing candle. It's Strat. You just didn't know it. You've been trading. You've been trading it all along. You just did not realize it. Great, cool. Everybody, so everybody's understanding it. All right. Okay, cool. So that is our 1, 2, and 3. So that is what it means when I say, like, I'm like, going into next week, I expect a 2-2. Now I might like, there's different combinations, right? There's a lot of different combinations, and let me see if I can find it in my twit. So I'm gonna try to find it real quick for you guys. Actually, you know what? Let me see if give me a second. Give me a second, nation. Let me see if I can pull this out. I don't know if this is gonna work. Let me see if this works. All right, cool. Great. So if you remember this, right, these are the things I've created on TradingView for you, and I posted it all for you guys a while back. I'm just gonna pop a bunch on the screen just for you all to kind of look at. All right, I'm not gonna post everything just because we're not gonna get through all the combinations. I am in the process of creating more of these, a more complete list. There is a set number of combinations, per the Strat community. There might be more different ones in the futures, but as of right now, there is only there's a certain number of variations on it. So when I say, hey, I expect a 1-2-2, right? Well, it really depends on what the candle is doing, right? This, if we cover up this right here, this 2 right here, and let's just say Friday's was a 2, Friday was actually a 3, but let's go with 3, right? Perfect example. Friday was an outside day. This is a 3, right? Friday's action, if you look at SPY, it was actually a 3. It took out the high and then came out and took out the low. So what I'm gonna say on Monday, I'm gonna say, hey, we have a 3-2 combination or a 3-1. Meaning that we're either going to take out the high or the low of the previous Friday's action, or we may not. We may consolidate. And that really is going to be dependent on, 1, how futures move, and 2, how big of a candle the 3 was, right? If we have a 3 candle that was only for SPY like 2 points, well, that's not a very big range, right? Even though it took out highs and lows, it's not a very big range. So likelihood of the price getting taken out is very likely. But let's say SPY, which made a massive run, SPY made a massive run. We're probably not likely right now going to make a 2 up, right? Because prices tanked on Friday and we're so far down here. We're most likely going to make a 3-2 down or 3-1, right? To go back up and take out the high, futures would have to make a massive move Sunday night, and we would have to have some kind of positive econ data on Monday morning to drive price all the way back up and take out Friday's high. But that is what so now you're starting to see, okay, hey, Sad is saying, part of his analysis, he's seeing a 3-2 or a 1-2-2 or maybe a 2-2 up or 2-2 down. That is what I'm referencing now. So that's what these number combinations are telling us, right? It's easier to see this than saying like, oh, we had a bullish or a bearish harami, right? Well, Friday was actually, or not harami, engulfing. Friday was actually a bearish engulfing. Why? Because we took out the high and then we came out and took out the low. So it's technically a bearish engulfing on Friday, right? And then it'd be hard to see like, okay, what's next, right? Well, now playing with trading the strat as part of your strategy, that if I say, hey, we're going 3-2 down, we're going to look for a down movement. So we're going to potentially take out the low. So if we're somewhere in the middle of it right now, and we're expecting a 3-2 down based on what data is showing us, we can go down, take out the low, and then a little bit some. Does it mean to continue down? No, it just means that, hey, we are attempting to look for a break to the downside, and whatnot. So that's what that means in terms of these number combinations. So hit me with another one if that is making sense and you're tracking now. I want to make sure you're following on that as well. Just hit me with one. So now when I say 3-1, 3-2, 2-2, you understand what the 1-2-3 is. I just want to make sure we're all following now. All right, cool, cool, cool. Most of you are tracking, and look, there's a lot of resources out there. At the end of this, go on YouTube, Google the Strat, go on Google the Strat. You will find vast amount of information from people that are, Rob's successors or proteges that have done this. There's a lot of people on. I don't want to say a lot of people. There's several good names on FinTwit. I'm not gonna name them. You can find them yourselves. That trade this. I would say unfortunately a lot of them have closed their Twitter because they have paid services that they want you to join in order to gain knowledge, insight to them. But nothing wrong with that. Again, right? People should get paid for the time and their information and whatnot. But just something to look at. Anyway, I'm gonna delete these off. I've had them tweeted on my Twitter. You can find them. I will add them into my pinned tweets at some point in time so that you can easily pull it up as well. All right, cool. Okay, so now we have our 1, 2, and 3, and you've seen, it's in, what happens is always based on the previous candle. So that's what we're looking at, right? And then, like I said, it's not any different than what you've seen in the past, right? You just were not aware that you were trading the strat. It's all here, right? Just leaving these up here so you all can see it. Now I'm gonna run into examples of how this can be used while you're trading, right? We don't want to assume that automatically, we had a 2 candle and since we have another, 2 candle, like, this was a 2 candle and then, we broke up 2 candles. I'm going to automatically go long and then it versus come back and shorts on you, right? That's, just like with any kind of strategy, any kind of technique and whatnot, there's other variables in it. It's just not like, the combination is going to be, 1, 2, 2, it's going to be, 1, that was a, this was a, let's see, move this down. That was a 1 and a 2 up, and then we're automatically gonna make a a 2 down, and then as soon as it goes 2 down, I'm gonna short it and then continue to hold it. That does not necessarily mean that, right? It depends on where it's at. Let's just say that if we're trading the EMA cloud system, EMA clouds are bullish, and prices currently above overextended. Well, we expect 2 down because it's overextended and it's gonna maybe come back, hit the 8-9 EMA, but then eventually it's probably gonna continue riding that and go up, right? You don't want to get screwed over. So there's a lot of things. It's not as unfortunately it's not as simple as we have this number combination and I'm gonna play it every time. Every single time we have a 1, I'm just gonna play whatever break it breaks. I'm gonna play it. It's not necessarily true, and that's defined right here by the 3, right? The 3 nullifies that, right? Eventually we thought this was gonna be a 2 up, and then eventually it actually became a 3 because it came back reversed and engulfed the bottom, right? So let's just go into some examples. Give me a second. All right, cool. Good old SPY. So I left this. I went back to this example just because this is on. You can see on the bottom, July 28th, 2023. Last Friday, no, 2 Fridays ago, right? No, it was last Friday. I can't remember. Whatever. It's 28th of July. And what you see on your screen is everything that I provide to you every single day, right? Every time you unlock my brain, I provide you this analysis, right? I'm like, here's my intraday pivots, here's gaps, top side pivot, no point scrolling on because we didn't hit it, right? Key levels, weekly highs, 50% lows, etc. Hey Taz, yeah, this is recorded. I will leave it up for a few hours. I may end up taking it down just for reasons that I don't want this to be taken as like a set in stone, like, this is definitely the way the strat works and whatnot. But this is just an introduction. And like I said, it's not scripted. So I rather have a shorter version instead of an hour video where people want to like intro the strat and they're like, we just spent, 60 minutes talking about one thing. I'd rather just make it short, but it'll be up for a few hours, at least task so that you can go back and look at it when you have better connectivity. Okay, look, guys and girls, this is SPY again on a 10-minute time frame. We will change the time frame a little bit later because it does matter. But this is what I always give you guys before the market opens, right? So this would have been, this is what would have been like pre-market, right? You would have my game plan, and this would have been it, right? I would be like, hey, here's the pivots. You know, you can go back my tweet, go back 28. You'll see I drew this out, and literally it was like this. You know what? Give me a second. Let me see if I can find it. That might be the better way to do it. Let me see if I can find it real quick. Like I said, nothing scripted, so please bear with the lack of smooth transitions from one thing to one thing. Give me a second. And if somebody else finds it before me on my Twitter, then please go ahead and link that if you can. Sorry, 28th, right? 28th. Almost there. I'm on the 1st, 31st. Bear with me. Almost there. 30th. Give me a second. Where is it? Here it is. Sorry, 28th. Right, so literally, this is it right here. Right, this is a screen that you know, this is the analysis I gave you, so you guys can all see it. Literally right here, same thing. So anyway, look, so with that said, we want to trade this, and I'm gonna fast forward to everything so that you can see it, right? And then we'll just play whole days, and I'm gonna tell you spots to look at. Okay, so the trading day is done. Okay, this is the whole entire trading day for this. All right, cool. Let me see. So look, let's just say we didn't want to get in the morning, right? Because, you know, a lot of volatility, we didn't know where it's going to go. You know, even though we bounced off this intraday pivot, you know, and we broke the 50% and we were going up, clouds are bullish and whatnot. You're just not comfortable getting in, right? Nothing wrong with that. You know, sometimes it's good to be patient, right? Being patient pays you, right? Let's just say you're like, I'm gonna wait for reversal. I'm gonna wait for reversal, right? Like a lot of you like to play reversal. That's great. It's a great strategy. And look, you know, based on our analysis, we're like, hey, we have certain levels, right? We're looking at 50%. We're looking for look at the weekly high, you know, and we look at this key level. And at this time, you're like, okay, a lot of you may have started taking a short here just because you're like, hey, price already ran from 455.3 up to about 456.8, which is a good run for SPY. But the clouds are still bullish. Some of you may have been caught here, got trapped, and then eventually it hit up here, right? The key level, right? You can see it broke it, but, you know, if we're playing patterns and whatnot, we could like, hey, it was a fill breakout. Speaking of patterns, if we go over here, right, we drew this wedge, right? So you can be like, hey, it broke out here, right? Rejected off the intraday pivot, broke out. This is the, you know, the breakout, pull back, retest. This is, you know, you could have entered and just held it, right? Because as long as they didn't break the cloud, you keep riding it. But anyway, look, let's just particularly focus on this, you know, this rejection here, right? This key level. And you might ask yourself, well, how do I know if I could have wouldn't get in, right? You know, a lot of people are, well, we run into exhaustion, right? I mean, exhaustion just means that price is, you know, buyers are running out of steam, you know, and if they don't bring more volume in, sellers can just come in and dump it, right? And that's where we look at volume, right? Increase in price on declining volume, right? You know, you all know that. Where the strat comes in very handy is this. Let's just say right now we're on the 10-minute. I'm gonna switch to the 15-minute. And you all remember, right? We're just talking about the 1, 2, and 3 candle, right? 1 is inside bar, 2 is direction movement up or down, 3 means I took out the high and low. Just a quick recap. So, look, here is our candle. I don't know if you can see on your screen. We broke this key level, right? We're like, is it going to continue up higher or not, right? And then starts to fade a little bit. So here, let me know if you see what I'm looking at. I'm gonna give you a context, right? It's somewhere in here. Can you tell me what candle you might see in terms of the strat, the 1, 2, and 3, in this little circle or rectangle area? So type it out if you see. Type what candle you think I'm looking at. That will give you a hint on how we can trade this. It's in this area somewhere. I'm gonna let you know. Remember. So this is on 50-minute time frame. Do you see what I'm looking at? I just want, this is kind of to, test if you see it. So somebody type what they think that I might be looking at in order to take a possible play on this. Oh, good job, Josh. Good job. You seen it. Yeah. So Josh just said one hanging man, which is old school, traditional technical analysis, right? Boom, there's our hanging man. You guys see it right here. Good. Yep. So here, and the reason why that's a 1 is because look, previous candle, that's the high, previous candle low, inside, right? Just means that, okay, look, price is starting. Look, it made that, it ran up, but then the next candle, it could not open above it. It was contained in it, so it's starting to reverse in decision potentially, right? But this is an inside bar now, so that's on the 15-minute. So what we would do in the strat is like, okay, well, we have a key level here that we're talking about. 2, we failed to go up higher. 3, this is a hanging man inside bar. So we're now like, okay, bulls are starting to lose their momentum and bears are starting to come back in. If we're playing the inside bar, historically, people will tell you to start to enter when we break the low of here. If you're new to me, you're not going to hear this, but if you are an OG and you've been here for a while, I always say, look, when I give you a number combination, these are the larger time frame view. You need to drill down and go into a smaller time frame in order to enter, right? So this is at 11:45. The inside bar in 15 minutes, 11:45. There would be nothing wrong if you would have taken this anyway. Let's say you took it on the break of that low. You can see right here, it's a little bit smaller screen, but that says 49 cents, right? If you would have taken low on a contract, you would have made 49 cents move on SPY. And honestly, that probably would have netted you a quick 20 to 40% on your premiums and whatnot. Hey, Topher, yes, the strat, we use the entire price action, the wick, shadow, tail, whatever you can call it. More traditional view of it, they only use the body, especially with Forex, and I kind of touched upon that in the beginning of this when we open up. But yes, we use the entire candle, wick and all. And the reason why is because, not the topic for another day, right? These are liquidity zones. These are imbalances, right? That just means that, hey, price got up here, got rejected strongly. It's waiting to be filled. It comes back up later on, it gets filled, and then goes back up. So it all matters. Okay, great. So look, we were just saying this is 15-minute inside bar. So these are lines, and we can drill down. We could drill down. Like we should draw down to a smaller time frame to see when might be a good time to enter. So these two lines are here are inside bars, right? Here's our here's our 15-minute. This is that big one that comes down, right? What you can see here is that we also have more. We have another inside bar right here, right? This is the inside bar, and then we could finally break down, and then you can drill down smaller, right? 3 minutes, determine where you want to get. You're like, oh look, 3 minutes, it's not going higher. You might want to start shorting somewhere around here, right? So this is our 15-minute here, right? And the thing is, if you enter on this inside bar, your stop would be at the high of this or a little bit higher, right? Or you can put it at the 50%. It's very subjective, right? It's really based on your risk tolerance, on what you are willing to risk for your reward, right? If I were to enter this, One, I would have targeted somewhere right around here. Why? Because this is where the price consolidation is, right? You know that if it comes down, we're starting to reverse. It's going to take this out no matter what. It's definitely going to take this out. That's just easy. The real action where it can consolidate is right around here. And then obviously the, pre-market and opening right here, right? And you can see that it hits this here and then it reverses. So hopefully you guys are still tracking with me, right? Let's say you were not comfortable on this inside bar, right? Well, we have another inside bar that you probably just didn't realize. Here's another one. Here's an outside candle. Here's the inside, right? This inside, this double inside, actually triple inside bar, right? Another triple inside bar. Let's say you didn't take it until the break of this, right? Well, you could have taken it on the break of this right here. And your stop, like I said, would have been up here, the high. And you could have rode this down pretty much from entry. Even if you just wrote it down for the first candle, like it came down, came back up, never even came up to your entry. You rode down to this next 15-minute candle, like, well, it's 73 cents move. Again, that would have been probably 30 to 40% on your premium. And if you would have called this whole move $1.80, $1.82 move, right? Well, this right here, this 15-minute inside bar play that you would have taken right in here would have netted you over 100%. Depending on the strike you got and the expiration. If you got 0DT and you got this in at this entry right here and all the way down here, you would have made 200-300% on that play. Again, look, these are 15-minute inside bars. We can drill down to a smaller time frame to see when would have been a better entry, right? For me, if I was playing this on the 15-minute, I'm like, oh, I got a 15-minute inside bar. These are my inside bar lines, highs and lows. I would have entered, after the play, I would have entered probably right here. Why? One, look, it was coming down and then came back up, failed to come up above this key level. So for me, I would have entered here, set my stop at this high. So your risk reward, right? You would have been risking potentially, your risk was 23 cents and your reward was $2.39, right? Let's say you're not even targeting that. Let's say you were targeting our original area with this consolidation, somewhere right around here, right? Right around this area, right? So $1.61 for 23 cents, right? That's almost like an 8-to-1 reward ratio. So let's say you got a 0DT $100 SPY contract, right? You would have given up $25, and you would have been trying to gain 160% on that, or $1.6 on that, right? So you can see that the risk and reward would have been in your favor, and that would have been a great trade, right? So that is just the inside bar on the 15 minutes, right? And there's different ways to, we don't need to always play inside bars, but it's just a way to look at it that gives you a little bit different visual. We can flip to this works on every time frame, right? It's not just one time frame, right? So now we're on 30-minute time frame. Look, we got another inside bar, right? This is inside bar. And I would say that the bigger the time frame, the more strong the move will be. Meaning that if we are playing an inside bar break on a 30-minute time frame, the likelihood that continued in your direction is a lot better than playing on a 2-minute. So we broke this. Look, this was an outside bar. This was the inside bar. Inside here, you would have played the break right here. And again, that 7 cents move, right? I know a lot of you, might be like, oh, well, that's not a lot. But in terms of 0DT, that's a lot, right? That most of you would have gotten out here or even here because it pulled back. Most of you would not have ridden out to the full ride, which is fine, right? But nonetheless, just playing off a 130-minute candle here, you would have made 77 cents, from your entry, which is huge, right? Huge. So that is another inside bar that we're looking at, right? So this would be look, this was a 2-1-2. This is the 2 because it took out the low. This is the 1 to the inside, and then now here's our 2 down. So now you can see that's what I mean by 2-1-2. I'm like, oh man, love inside bars because it's always going to give us a directional movement to one side, maybe sometimes both sides, but we can at least capitalize on it if we are good with our execution and whatnot. So just something else to look at, right? Let's we can switch the time frames around. Let's go on a let's see. This is a 65-minute, right? Look, we have another inside bar. Let me just get rid of these lines, right? This is inside bar on the 65-minute right here, right? This candle here is contained within this candle, right? This is the, right? You could have played the breakup. You know, obviously you can see that it broke up and then came back down and whatnot. But that's why I said your execution is going to be critical on this, right? Even if you were to play that up, can't even see what that is. It's a 30-cent move. Nothing, you know, nothing sexy, not a great move, but it is inside bar nonetheless, and you could have played it. Let's go to the 60-minute now, right? 60-minute, again, we had an inside bar as well. Look, here is the 60-minute candle. This is the inside bar, right? Break the low. And you're playing on the hour, right? You'd be letting this play out for an hour. $1.82 move. So that is kind of what it is in terms of that. Let me see if there's anything else I'm missing. Let's see. Okay, here. This is a great example of, let's say you didn't play that. We missed the move up. Got hesitated. You missed the move down because you were afraid that it looked strong as you continue on. The clouds were bullish and whatnot. But let's just say you missed that, and then but look, you still have all my information here, right? Intraday pivot. Last time we hit it, we just rock it up, and obviously you can see we hit it here and we rock it back up. But something else to look at. Look, this right here. This is the inside bar, right? On a 5-minute inside bar. Here's the high. Here's the low. Never broke the low. You could have been like, okay, this came down. This came down. It started coming up, come down. Like, hey, I'm gonna enter here. As soon as price breaks here, I'm gonna enter and I'm gonna set my stop at the low, right? So you would enter that around 455.45. And your target would have been here, right? You would have been looking at target. This is your first target, and then you would walk it up to the next highs, right? That's kind of default what the strat does. They keep taking up the highs of the previous candles, right? But and this is not to get too complex into it. This is purely talking about strat. But here's a great trade that a lot of people in the nation love taking. And one is, look, a lot of you on this day took this trade for numerous reasons. One, maybe the inside bar. Two, we just hit the intraday pivot. After a massive move down with the intraday pivot, and most likely not going for just do the exhaustion double bottom. Another reason is because, look, if you're trading cloud system, every time I say we're overextending the cloud, we always pull back. It always happens. It's just the way it works. That just means price move way too rapidly. It has to catch up back to the EMA lines or the clouds, right? Every single time it does that, it happens, right? So you could have traded that, and then looking at the strat, we had the inside and you could have went up. And this is why I say that, for me, when I enter my trades, I have multiple confluences. It's not just like, oh, we're overextending, I'm going to get in, right? For me, no, I'm like, look, we hit my intraday pivot. We are also like, if you look, this is that trend line we drew from the morning, right? There's this wedge. We literally hit that trend line, rejected, right? So that's another thing. And then we have the inside bar. We're overextended, exhaustion, double bottom. There's just a lot of things I look at that I see that give me that confidence to play it up. And again, like, what are you doing? You're getting in here. Like, let's say you get in here. You're looking for a 40 cents move at a minimum, and you might be only risking, 33 cents. So it's almost a 1-to-1. But the reality is, like, at this point, you're gonna be targeting the clouds at a minimum, right? So 50 something cents. And by this time, if it's holding, you're going to keep holding it, right? Even the next stop, you would have made 88 cents. Nobody's saying that you would rode to the top, which would have been, $1.90, but you most likely would have rode it somewhere in the middle of here, right? Because it's just so far extended. And this area there's really not much price action, right? It's this chunk right here in the middle, which is the weekly highs, where price will eventually go back to and draw its attention and whatnot. So again, that is just kind of a quick high-level introduction to the numbering system. And we're not going to talk about here, like this was potentially a fail to down, but it still continued down. We got to look at the pattern of a hanging man. There's another inside bar right over here. Like you can just start seeing it. Once you start seeing it, this would have been another great trade right here. Inside bar right here, right? The reason why this would have been a great trade is because, look, the clouds are bullish. It's been riding all morning, right? You would have taken a break and then you would set your low, right here. The caution is you're like, oh, well, it came down, right? Well, it probably came down first and then pushed back up. So you would wait for the break of this and then entered, and you would set your stop here, and as you see, it never stopped you out, right? So if you entered here and you just kept riding it, well, shoot, from here you would have made full dollar move, right? So it's just looking at things like this, and then just trying to see if we have any kind of, I don't see any engulfing candles or 3 candles right here besides this. And at open, I think if we change the time frames at open, we have one. Yeah, out right here we have one on the 10 minutes. Right here. It took out the high and low. So it's just looking at things like this, right? When we do this, so here's our 3 candle right here, 3 2 2, right? We're like, hey, 3 2, right here's a 2, and then 2 up again, right? So 2 here, broke the high, 2 here. So you could have made a trade there as well. So it's just kind of, it's like I said, it's nothing new. You all have seen it. It's just a different way of looking at it as opposed to just staying in your screen. Oh, green candle, red candle, green candle, green. Okay, what's the price doing? But now, like, hey, I see a 3. I know that it potentially, because price is right, above a certain point, most likely not gonna make a 2 down. Most likely make a 2 up. So you could have taken, hey, I'm gonna take a trade here. The clouds are holding, and you could have, prematurely got in before you broke the high, and then made a good move, right? Same thing. Here's another 3. 3-1 inside. You could have taken down, not a great trade, but you could have taken down. It's just different ways to look at the price action and make it a lot easier for you to try to anticipate what price could potentially do. And then the way I trade it is different because the strategists don't look at they don't look at things like this, right? They don't look at whether it was a bullish, bearish engulfing and whatnot, or a hanging man, a shooting star, or let me just put these out there so you guys all can see, right? The Strat community does not really care about this kind of stuff because for them, in their words, lack there, it does not matter. They don't care about that, right? That to them is not right here. Let me show you another one, right? So 3 inside down, right? So this is actually, let's just say this is a 2. This is 1, right? 2 1. We're looking for 2 1 2. Well, this is our 2, right? 2 down, right? But traditionally, this is called a 3 inside down, right? A lot of people, you probably don't know. There's just hundreds of patterns you'll never get used to. But by doing this, for me, when I look at the strat, I use this as well, and it helps me determine what we potentially can be doing, right? So that's kind of it, ladies and gentlemen. Like I said, this is not any advanced course. It's really just to give you a high overview of what the heck it means when I say 1, 2, 3, or that when I shout these numbers out, and so you guys all can start to finally understand what I mean by this. So look, if you have a comment, question, type it now so I can answer it, because I want you to walk away with understanding how this works. And I believe there's indicators on TradingView and whatever that you use to help you identify the candles and whatnot, for make it easier. But for me, it's just easier for me. Just I can look at it and I can see it's easy for me to see what we're doing. Here's a 2 down. This is a 2 down. This is a 3, 2 down. 2 up, 2 down, 2 up. Reversal. These are all 2 downs. 2 up reversal. We change the time frame. It changes the way we look at it, right? This is, here's our inside. These are double inside bars, triple inside bars on this big one, right? But this is, this is inside 1. This is still inside. This is 2 up. So, once you start looking at it, you will start to see a little bit more. It just makes it easier, right? So, and that's how we're able to catch a lot of these moves, right? That is part of the reason why I was able to call the outside day yesterday for you, right? So, you want to know what PMG is? Somebody asked. I've got you got an itch. Hopefully, you're in the right places, not somewhere else. If not, get checked out. Not a medical advice, not financial advice, educational. Anyway, PMG, look, this is what PMG is called, pivot machine gun. It usually happens when we have nothing but consecutive downs, right? So PMG right would be right here. This was just a massive, massive move down with it was not contested at all, meaning that there was no real resistance to it. And what that does is that if you were a person that got into this glorious move and you did nothing but short this and you set your stops up here, well, most people will set their stops and they'll keep walking it down, right? They usually, if they got in here, their stop will be up here. Then they got in here, their stop up here, and so on. What a PMG does is basically, because everybody shorted and nobody really got stopped out, what happens is the algos and market makers, and the institution, they know that, right? So what they're going to do is that they're going to inject a load of buying orders in here, and when they're able to inject strong enough orders, what it does is that it stops people out, and once people stops out, it squeezes, right? That's essentially how a squeeze happens, right? It just goes stops out, and eventually flushes, right? And essentially, what happens here, almost complete reverse the next day. And we can say same here, right? Almost up, and then it comes back down. So that is what a PMG does. When you have a strong, crazy movement one side that's not contested, it eventually gets reversed later on. That's just the kind of way it happens, right? It's just, everywhere you see where we have these crazy dips and spikes, that's what happens. And here's another thing. This is not strat related again. This, let's just leave it off with this, and then you guys can all go about your merry way. But look, when I talk about the cloud system, we're far away. Look how far this is overextended, right? We are on a 30-minute, a full dollar to the downside. What do I do? Pull back up. Oh, look, we're overextended here. This is where it closed up here, right? So we're on 30-minute, another $1.30 something, right? It always pulls back, even, and so it doesn't mean that it's getting reversed. It just pulls back. Let's see here, right? It's far from the clouds. Clouds are up here. It eventually came back to the clouds, right? Somewhere around here, like 50-something cents move. So every single time you see it far away from clouds, you will see that it pulls back. How much it pulls back really depends on the market conditions, but it will always pull back, right? Same here. You can see it, right here. Look, it does the same thing right here. Overextended, pulls back a good 80 cents. It always pulls back. Look, this was fully extended up here, right? By this time, all the way up here, and that's why it came inverted hammer. This is called failed 2 up. Came back down and touched the cloud. So, I mean, I'm not saying you would have gotten up at the top, but let's say you got somewhere in, the middle. You would have made a dollar move as well. So, yeah, look, guys and girls, this is a intro to the strat. This is also an intro to how I trade and what I see, and that's why I can say that, we have a very good successful rate here in the nation, right? And because a lot of people trade either both systems, one system, and they incorporate other things into it as well. But this is what makes it a little bit easier to kind of see, right? Here's another perfect example. On 30-minute, this is a bearish engulfing, an outside bar 3, right? This was actually looks like a 2 up, 2-1, right? And then here's, that would have been a 2-1-2 combo that we're looking, but it failed, came back down and took out that. So now we're looking for a 3-2, right? Either 3-2 up or 3-2 down. Most likely not going to make a 3-2 up just because of where price is at and how it rejected. So you would taking your 3-2 down entry, your entry would be at 458. And look, you could roll that down to 457. What was this? 458.6, 457.63, right? A full dollar move. And then your stop would have been at, entry. Never came back up, never stopped you out. Even over here, it got close, never would have stopped you out. Let me just put that line in, right? That would have been your entry. It got close, never stopped you out. And then look, if you would have held it, oh my baby, look at that. All that way down, right? And that would have been, I'm not saying you rode to the bottom, but if you did, I mean, $7.10 move. That's how some of these people, some of these cool cats in here, you know who you are. When you take one contract and you literally play $100, like, it doesn't matter. Even if it goes back to break even or a little bit negative, you would have made 10x on this trade easily. Depending on what trade you got. And this is the type of stuff that, with the power of one, you can make hundreds and thousands of dollars off of $100. So, let's see. I'm just seeing what you guys are saying. Yeah. So look. It is called Sadie's pivot ribbon, right? Right here, Satty's pivot ribbon. Right here, that's what it is. Satty's pivot ribbon. That is the cloud system, right? That's the one I use. There's another one called Ripster's EMA. He is the original creator of it. I want to give him credit. Yes, the same Ripster that is associated with the Atlas, Zach Moore's pump and dump grand scheme of things, but I don't know if he has any play with that, or he could have been the whistleblower, not here for that topic, but Ripster is the guy that created this visual, right? It's not different. Look, guys, this is actually the, let me see, 8 EMA. I want to see if I can, EMAs. See. I'm going to do this real quick for you all so that you can see what it looks like. Oh, man, this is not the one. Sorry, let me see if I can. Is this the one? Trying to see if I can color code it for you all so that we can see it. Nope, that's not the one. I apologize. I'm trying to find the one so I can show you. Maybe it's this one. Let me see. Give me a second. I want to really show you this because I think a lot of you don't realize. Oh, man. Nope, this is not it. I'll find it later and I'll give you a visual. But look, long story short, let's just look at this right here. This is the 8 and 9 EMA, this top line. The middle line is 21, and this is the 34 EMA in the bottom, right? And then eventually it crosses over here. When it crosses, the clouds change color. A lot of you have been trading the EMA cloud system. Again, just like the Strat, you just didn't realize it. The cloud, what it does better for me is that it gives me a visual representation of what's going on, right? If it's green, it's market momentum is bullish. If it's red, market momentum has shifted. It is bearish now. And in the clouds, usually what's in the cloud, it's easy for me to see. Because sometimes when you use the 8 and 9, you're like, oh, it broke the 8 and 9, I'm going to do this and that. For me, I like to see if it's in the clouds, it usually means that it's holding. Once it breaks through the clouds, that's when I am like, okay, things are changing and shifting, right? Along with other things we look at, market structure, et cetera, and all that stuff. So, yeah, boys and girls, that's all I got. You know what I mean? We're not going to talk about, there's a lot of other things on there. You see, I have highs, lows, 50%. I talk about candlestick patterns. I talk about liquidity. I talk about imbalances, pivot zones, et cetera, right? This is really just an intro, high levels, elementary level of what the 1, 2, 3 means and how you can interpret it and the different combinations, right? That I showed you earlier with the 1, 2, 2, 2, 1, 2, 3, 1, 2, 2, et cetera, right? There's a lot of combinations out there, but it makes it easier for you. In fact, let's, since you're all here, I got a couple minutes, I will spare. Let's just look at this. Oh, yeah, I tweeted this late last night, but so this yellow line is the anticipated move since we broke out. And ironically, it lines up with the monthly low. I don't know. If we get there, that's trouble. That's a hell of a drop from 460 to 437. I'm not saying it's going to happen, but a lot of you that have been on my thing for the anticipated move video, you started incorporating that into your trading strategy, and you have seen that it has played out pretty consistently. I'm going to move everything. Great. See, this was your outside bar, right? You guys see it now, right? Took out the high, fell, came out, took out the low. So you guys can start seeing it now. Let me just make that easier for you. See it? I will say to you all that the reason I swung my puts is because of this, right? This is the gap. This is the gap. We made a massive push down. The bears just said, F you, not going for this gap up here. And we failed 2 up, eventually turned to a bearish engulfing. And then also because we closed below the 21 EMA, which is right here. Right? We closed below that. The 21 EMA, if you're not familiar with it, is a pivotal EMA line, right? Usually in traditional EMA strategy, EMA 21 EMA, however you want to call it, is where we like, hey, if we close below it, we're going to be looking to go in that direction, right? And also another reason is because look, we found it took us a while. Like, we tried to break the 8 and 9 EMA. We tried up here, failed. Tried again, failed. Eventually, we closed below it, and then we came below 21, came back up, failed. We came back above the 21 and 8, and eventually we closed below it. Now we are very close to this 34 EMA. So for me, I know from my experience that the algos are out there. They're gonna try very hard to test this 34 EMA because that's the next bounce point, right? That's where they can push it down to, and that's where it's gonna bounce. If it does bounce. If it does not bounce, well, what do we have? We have this gap right here, right? The gap is right here, so close. I don't know if we're gonna fill it completely and shoot down. I'm not saying that, but this might be the great point where we hit this and then we eventually bounce back up. So that's the reason why I swung it. So the reason I did that is because I'm like, okay, I think I can get at least another dollar and a half out of my puts, which at that point, anybody who swung the puts with me, you should be green because some of you sexy people got in up here. I got in right around here. I did not have the best entry. I was green for the one day, and then eventually I was just bleeding. I was down like, I think 50 or 60%. But it was a swing, and I was like, okay, I'm just gonna let it play out, and I got rewarded. Right, scaled out some of my positions for like I think like 80%, and then it was up over 100%. So tomorrow or not tomorrow Monday, I will probably, if this continues down in futures, maybe out 100, 150%, 200%. We don't know. Just a little glimpse. So for those that stayed on a little bit longer, congrats. You got kind of what I'm looking at and reasons why I swung into it. There are a lot of different reasons why. So again, I think a lot. Not saying you need to do the same, but this is just kind of what I see. When I've been looking at the weekly overextended, right? Monthly. You don't even see the clouds because we're so far from it. Look at 430, which would be crazy, right? Inside month, you see it. 2 up, 212. Anyway, guys and girls, thank you again for joining this stream. Remember, please hit the like on the video and leave a comment more than a couple sentences. It would really help get this out to people, and I would appreciate it. All right, girls and girls, I will talk to you later. Bye.